Quindell, the insurance claims processor, which has lost over £2 billion in market value since April, has tried to restore investor confidence by ejecting Rob Terry, its founder and chairman. Henry Mance, our media correspondent, joins me now to explain more. Henry, you've been covering this company for a while now. What is going on with this small British company, and why should the rest of us care about it?
Well, this has been one of the great soap operas of the London stock market and its junior market AIM. Quindell floated back in 2011. No one took any notice, but it came to symbolise a kind of tech boom. It said it was going to roll out software into cars, and very quickly it got a very large following amongst small investors, but also some big names. And what Quindell really symbolised was huge optimism in how small companies could take technology and make lots of money out of it. Another company like that in the digital advertising world was Blinks. Now, both Blinks and Quindell were hit by short sellers from the US, and the questions came: was London's junior stock market a place where quality companies were listing, or was it in fact somewhere where rather speculative companies with rather strange ways of accounting were doing business?
So how did we get here? Give us a sense of how Quindell, this company that processed claims using technology and kind of pitching itself as a startup or a disruptor of a new market, how did we get to this place where it got rid of its very charismatic founder, Mr. Terry?
Let's look at the last 12 months. A year ago, Quindell went to the stock market and raised £200 million, a huge amount of money for a small company which hadn't delivered much cash until that point. It then went around buying even more companies that did things like processing medical claims, helping with legal services. If you had an insurance claim, Quindell wanted to do all parts of that business. The stock price shot up, and then in April, a short seller, Gotham City Research, published a dossier of allegations, raising all sorts of question marks around the corporate governance, the type of acquisitions, and fundamentally the ability of this company to turn paper revenues and paper profits into cash.
Now, you've written today about some of the history of some of the people involved in this company, and have asked whether investors themselves should have asked some more questions, or maybe been a bit more aware of some of the issues around the people behind Quindell. Give us a sense of that, and also looking to the future, where does this leave the company?
Yeah, one of the reasons why Quindell is really interesting is it suggests that the stock market has very short memories. Rob Terry brought a company to the market in 2000. 3 years later, he was booted out after its value had collapsed around 97%. The same thing in maybe a shorter period of time seems to have happened with Quindell over the past 6 to 12 months. So when we look forward, well, we can look back at the past really and say, well, what happened with his last business? What happened with Innovation Group? The shares are actually up since he left in 2003, but it hasn't outperformed the market during that period. Is there a business in Quindell? The part of the problem is they made it very difficult to understand what exactly they did. There was so much hype, so many optimistic pronouncements. So the new management that will come in has got to look at how it can seriously say, this is what we do, this is how much money we'll generate. It said it made pre-tax profits of £150 million in the first half of this year. Investors, judging by the share price, simply don't believe that that money is coming through.
Henry, thanks very much.